You look at the move in longer term interest rates, it's significant. And at what point does that start to catch up? The expectation here is that next year you might see what you saw in the first year of the Trump term, the last Trump term rather, where you had kind of muted volatility, but then volatility started to pick up. Will the bond market start to eat into the stock market's calm?
Yeah, well, let's back up a little bit and recognize that the movement up in mid-range and long-term interest rates began a few weeks ago. And part of that, I believe, was a belated recognition that interest rates had moved too low. Not because inflation is out of control at this point, but rather because the economy is continuing to grow, and we are looking at a yield curve that was incredibly flat. One of the things to keep in mind is that as the Fed thinks about its decision today, it will be impacting only the Fed funds rate, right? Only the very shortest end of the yield curve. Those intermediate long yields have been moving higher. And as you point out, as they do, that creates, all of the things being equal, an obstacle for valuation. However, the U.S. economy shows no sign of recession at this point. The economy is growing well enough that corporate profits look quite good. The guidance that companies have been giving for 2025 is positive. So the valuation responds to several different things, and I believe right now investors are looking at the prospect for a long, sustained period of economic growth and corporate profits continuing to increase.
I referenced earlier Torsten's Slack note. Out of Apollo, Torsten sends amazing tidbits every day that are super interesting. A couple days ago, he pointed out that the top 10 stocks in the S&P 500 have an average valuation of 50, a PE of 50, which is aggressive, to say the least. You talked last time you were on with us about concentration risk, and I think it's only gotten worse since we spoke. How concerned are you going forward? Or have you maybe changed your take on these big companies with deep moats and massive capex?
So much has already been said about concentration risk. I'll be brief, which basically is the following, and that is I'm pleased to see that market breadth has been broadening. That's something that's good news for investors. It's good news for the underlying companies. And I think it's also good for the ultimate stability of the equity market. But let's go back to the point about inflation. Will it become dramatically more problematic? And therefore, will interest rates rise far more than investors are now expecting? I always like to think about risks, both positive risks and negative risks. And one of those negative risks for me right now would be much higher inflation and rates than people are now thinking about. Now, there's a very big difference between what is said during a campaign and what actually becomes policy. But we all know that there are a number of things that could be problematic with regard to the inflation outlook. Tariffs, of course, would be one of those things that could directly harm consumers' pocketbook. We also know that a fiscal policy that focuses in on increasing demand but does nothing about enhancing supply could be inflationary. Changes, for example, to the Affordable Care Act could lead to higher healthcare expenditures, as would the elimination of some aspects of the IRA, which has been keeping pharmaceutical prices down. On a long-term basis, one of the inflation concerns I have is not addressing climate change properly. Just take a look at the damage today from California wildfires. It's going to be very expensive to contain those fires, to rebuild, and of course insurance expenditures. Those premiums are going to go up in these areas, as they already have in areas that have been devastated by floods, such as Florida and other southern states. And so I think we need to be thinking not just short-term about inflation, which, by the way, is under good control, but it's the intermediate and long-term view as well. Fortunately, the new administration is starting with a pretty good slate, pretty good starting plan. The economy's doing well. Right. Core inflation is under 2%. The one area of concern for inflation is housing costs.